Now, I think a super important stock to pay attention to is Amazon. Amazon of big tech is seen as usually like the riskiest play. It usually trades at about the highest PE ratios that you're going to pretty much find, for those big tech type companies, right? And so if you really want to know how risk on this market wants to go, pay attention to Amazon, pay attention to Amazon this week. Amazon's report earnings this week, right? Stocks performed pretty darn good this year, 54%, but do remember this stock fell 50% plus peak to trough last year. So for right now, Amazon's just gotten back a lot of its gains. Amazon's not sitting at an all-time high right now. There's a lot of stocks that are in that big tech category that are at their all-time highs or very dang close, okay? NVIDIA's sitting at pretty much an all-time high. We got stocks like AMD that are getting pretty darn close. Meta's getting really dang close, okay? A stock like Amazon, it's still quite a ways away from reaching a new all-time high. And I mean like double-digit percentages, like mid-double-digit percentages away from reaching an all-time high. If Amazon comes in and e-commerce looks like it's going to start to improve, and we hear some pretty good guidance there, and obviously Amazon Web Services, it's a business that everybody pays the most attention to. If we hear good numbers, especially out of AWS, and that things are going to get better from here on when it comes to AWS, growth rates are going to accelerate, look out, okay? Look out. Because Amazon will go on an epic run, and you'll also see simultaneously play out, right? Because if Amazon starts to see an uptick in goods, then you're going to see ultimately many of these retailers go on a run. And guess what else you're going to see? Trucking companies going to run, railroads going to run. If Amazon gives the all clear that, hey, we've bottomed as far as the goods recession, things are going to get better from here on, it's going to affect Amazon stock, but I can tell you it's going to affect a whole lot more than Amazon stock. Now, what am I sitting on going into these Amazon earnings? Okay. By the way, I'm not going to buy Amazon stock over the next few days. I'm pretty sure I won't. Okay. So what am I sitting on personally? Well, I'm sitting on, in the public account, about $140,000 worth of shares going into these earnings. And then I own Amazon in another account or two. So I'm probably sitting on certainly less than $200,000 because this is a main account I own Amazon stock in. So I'm sitting on a little less than $200,000 of Amazon stock going into these earnings. I feel very good, very well on how I'm positioned. My hope is that the stock price goes down on earnings so I can buy more shares, as I just want to continue to load up shares of Amazon. But I got to be honest with you guys, I'm not very confident that the stock's going down. If anything, I think there's upside potential. I think the goods recession is about over for at least the short term, meaning the next several quarters. I think Amazon Web Services could see re-accelerating growth in the back half of this year. On top of that, I believe the cost-cutting measures they've done recently and their, watching spending very heavily is going to produce some EPS numbers that are going to be shocking to investors in the back half of this year and at the beginning of 2024. And so therefore, I think if anything, Amazon's probably on its way to 200 versus on its way to 100. My hope is the stock goes down to 100 as I'm a buyer of the stock. My thought is it's probably more on its way to 200, which is why I've had so much urgency this year with buying Amazon shares, because I've kind of seen this whole vision coming, and it's kind of playing out the way I thought it was going to play out. We'll see how it all plays out. But my fear is this stock's run into 200 rather than run into 100. My hope is it runs to 100. I'm not very confident of that, okay? So that's kind of where I'm at with Amazon. The hyper growth stock of the bunch that I'm very excited for is Avant Brands, okay? Now, Avant Brands, super growth company, ridiculous growth company, but it is a super small company. I mean, market capitalization like $40 million, which means it's super speculative. Stocks like this come with big risk. Amazon, PayPal, Target, Foot Locker, those type of stocks, I mean, they all come with risk, but the risks are minimal compared to a stock like Avant, which is a super small market cap. These ones can be all over the place, right? And so when I look at a stock like Avant, the beautiful thing I like about this one, and by the way, it's only one of two stocks I like in the Jack Jackson category. They're kind of like the Louis Vuitton of Jack Jackson, is the best way I could put it. Whereas most folks in their space that compete in this space, they've gone with a very bad approach. It's been, let's flood the market with poor quality product, because this is this is a product category that some products much better than others, okay? And you can ask anybody that's very experienced with these products, and they will tell you, yes, some of this product's a lot better than other product, right? And when it comes to a company like this, they're really competing on the high end. They're really trying to make the best product possible that's really unparalleled in the marketplace versus a lot of these other guys went with just, let's try to grow as much as possible and sell it for as cheap as possible. And now many of those companies have gone bankrupt or in the process of going bankrupt right now. Versus companies like Avant that are looking like they're going to be in a better position than the other. Who would have thought it? Make a quality product and actually have your business prosper long term, right? And actually reap the benefits of that. So when it comes to this company, you got to understand whenever you're buying into a small cap stock, right? And this is the way I think about this. And I own a lot of shares in the stock now at this point in time. Well, a lot is a relative term, right? It's a lot of shares, but it's actually a small dollar amount because the stock's so cheap. But the company's really run by these three gentlemen, right? They're going to be the ones that are going to make or break this company over time. Miguel Martinez, he's kind of a newer CFO with the company. So it really comes down to Nort and this gentleman, David Lin, which, by the way, I think Nort should talk more about David Lin in the future, in my personal opinion. But, Nort's done a really good job running the company as far as the numbers go. Like, look where this company was 3 or 4 years ago with their revenues, their profitability, everything like that. And look where the company is today. He's been executing a very amazing kind of turnaround here that's getting very, very exciting. When it comes to numbers, here's the latest numbers that the company reported. Gross revenue came in with a record quarter. It was up 101%. I mean, that's insane. Gross revenue of $9 million. Now, remember, that's in a quarter. That's in a 3-month span. And the whole company trades for a market capitalization of $39 million right now. That's pretty flippin' flapjack insane, right? Like, literally, if they could do $9 million a quarter, then we're talking about over the course of 2 quarters, you're at $18 million, you're talking about $36 million in a year, right? And it's assuming the company wasn't to grow anymore, and obviously the company's in rapid growth mode right now. So it looks like this company very soon here, maybe even this year, could be growing, could be at a place where their revenues are more than their entire market capitalization of the company. Like, that's insane to think about, right? Total net revenue at $8 million, up 96%. Recreational net revenue came in at $4.8 million, which is up 53% on a year-over-year basis. That's insane. Export, which their export business is growing rapidly right now, was up 311%. Overall gross margin came in at 34% versus 23% in the past. And that was even with the fact that they had to liquidate a bunch of inventory. Because basically they, bought out this company completely, Flower, and they had to liquidate all this inventory. And so even with that massive liquidation of whatever prices, and Norton talked about that on the call, he's like, we just need to get rid of the product. They still reported that sort of growth in gross margins. That's pretty impressive, right? Gross margin dollars came in at $2.7 million. And their export business, gross margins came at 37%. That's a really, really nice number. They also announced that they just received an order, a $2.8 million purchase order from a single export client in July of 2023. That's pretty darn exciting. They just received new product listing approvals on several different products. And they negotiated and executed new export supply agreements, with Avant signing its first export contract pertaining to the German market in July 2023. You know the Germans, they want the good product, man. They don't want the cheap stuff. They want, okay? They don't have time for all that. So nonetheless, and then the credit facility they just announced recently, $3.5 million, which puts the company in a very good, I guess you can say, financial situation. And obviously, this company's kind of flipping the script over to profitability. And so with a company like Avant, if this company can just start doing $1 to $2 million of positive net income a year, it is a game changer for this company. Not a year, a quarter. If they can just start doing $1 to $2 million of positive net income a quarter, it's a game changer for the company, because then you could be talking about $4 to $8 million of net income a year, right? On a market cap that's $40 million. Obviously, the valuation would have to go up immensely in that sort of situation. I think a lot of people are just kind of keeping an eye on the net loss and net income line and trying to see like what's going on here. And once this company flips to net income, if they can do it sustainably quarter after quarter, game changer for the company, because almost every other company in the Jack Jackson space loses money. And most of these companies lose a fortune. If Avant can be seen as the one company that's a profitable company, do you know the sort of money that's going to flock over the stock? And so my hope is, when it comes to Nort, that he gets this company over to a position where they actually start bringing in positive net income quarter after quarter after quarter. Because if they can do that, the sky's the limit with this stock, okay? And so, it's a very speculative position. We'll see what happens with it long term, and I'm hoping things work out. It's one of only two stocks I like in this entire space. It's Avant and Implanet. They're the only two stocks I like in this industry. They're the only two companies that I believe the management teams have their heads on straight. Their balance sheets are in a good enough position to weather any storms, and I think both of them have bright futures in front of themselves. I think someday we'll be laughing about the days that these are stocks were penny stocks. We'll see, okay?